in Dallio's conception, generally he divides economies by whether or not the debt is denominated in their own currency or not. And that's also kind of the delineation between an emerging market and developed market, for the most part. And so, a country like Brazil, or Turkey, an emerging market because a lot of their debt is denominated in dollars, or in Turkey's case, also euros, because global creditors don't want to lend to them as much in their local currency. They might do it some, but if they're going to do it at reasonable rates, they want hard money, but at least relative to that economy. Whereas if you're Canada or the UK or the United States or Japan, your debts are almost all denominated in your own currency. And countries of that latter type tend to have more disinflationary types of recessions, debt crises. Now, there's a caveat that if a developed market has an energy shortage, it kind of replicates the emerging market experience, which we talked about earlier in this Q&A. And kind of the issue of a long-term debt cycle is that after you have super high debts, you've already had years of low interest rates, you can't really go any lower, and now you're running into growth problems or supply side problems. Usually they end up printing the money, which is very inflationary.
Yeah.
And so another way to characterize it, between what debt it's denominated in, is whether or not it's a public debt crisis or private debt crisis. So private debt crisis is usually disinflationary. An example would be 1929 or 2008. Those were the gigantic banking crises. Basically, what you had there was you had a lot of private sector debt defaulting, and when you default on debt, you actually destroy broad money. That's basically someone else's asset that's getting deleted.
That's a good point. Yeah.
And if you have banks fail and they're not FDIC insured, which you had back in 1929, money's destroyed. People had deposits, and then the bank's like, sorry, they don't actually exist.
Yeah.
They were just, multiple. They were fractional reserve, and our fractions blew up. So better luck next time. And so you have destruction of basically some bonds are destroyed, equities lose their value, money's destroyed, like broad money, claims on gold essentially at the time, and people were all poorer, and then they consumed less, and it's kind of just big deflationary kind of pop.
Yeah.
On the other hand, a public debt crisis where just the public sector has massive debts and they're printing the difference, like you saw in the 40s, like we saw to some extent here in the 2020s so far, that tends to be very inflationary. And so I think that's the type of environment we're in now. It's not a straight line, but I think that's the type of environment we're in now, which is a more inflationary type of debt crisis.
Yeah. And then with respect to the Fed Chair Powell in raising rates and his
So
claim.
I
Yeah.
I think he was referring to the tips market,
Oh,
because he's not referring to he can't be referring to current interest rates relative to trailing inflation, because those are still negative. Trailing inflation is still higher than current short duration treasuries, or any treasury for that matter. So he must be referring to the tips market. So there's things called break evens, which is where basically you compare tips yields compared to normal treasury yields, and because then you can separate out what basically the premium for tips is, which is essentially the market's anticipation of forward inflation,
hmm.
right? It's often unreliable. I mean, break evens were super low in like 2020, and we got 40-year high inflation like 2 years later, right? So that's real yields are in that case are forward looking. But that's what the bond market's saying. The bond market is saying, well, inflation is going to be low, and these rates are higher than what we expect inflation to be, and that's what Powell seems to be referring to. Some people like losing money, so
Yeah. Yeah.
yeah, they're always expecting inflation to come back down. They keep holding paper, and I say that as someone who I think this year I do think that holding paper is not a bad thing.
Yeah, I agree with you.